Welcome to exam.com. You're watching the Daily Market Comment by Raf Boyajian for Wednesday, August 3rd. I'm Cristina Marujos. On markets were reeling and interest rate futures were being recalibrated after Federal Reserve officials questioned the recent scaling back of rate hike expectations by investors. Following the less hawkish FOMC meeting in July and some worrying signs in closely watched PMI surveys, markets had started to price in a rate cut as early as the second quarter of 2023. But the message from the Fed on Tuesday was that investors had gotten a bit ahead of themselves in betting that the rate hike cycle doesn't have long to go. Fed fund futures for spring 2023 jumped higher after the comments, but by only 20 basis points, while for the remaining meetings in 2022, they only edged up marginally. The reaction in the bond markets was a little more dramatic, however, with the 10-year Treasury yield surging to a high of 2.7740%. The Fed's renewed hawkish language bolstered the U.S. dollar, which had already begun to snap a 4-day losing streak on Tuesday from heightened geopolitical risks. Increased friction between Washington and Beijing over House Speaker Nancy Pelosi's visit to Taiwan had revived the greenback while adding more fuel to the yen's 2-week rally. But the Japanese currency is on the back foot again on Wednesday as the stronger dollar, widening yield spreads with the rest of the world and receding fears of an imminent retaliation by China against the United States are stifling its safe haven appeal. The greenback has recovered back above the 133 yen level today, with gold also coming under pressure. In equity markets, European shares got off to a mixed start and U.S. stock futures were marginally higher, following losses for all of Wall Street's major indices on Tuesday. Investors will be busy keeping an eye on the ISM PMI for any fresh warning signs of a recession, as well as on the OPEC Plus meeting. Saudi Arabia is reportedly pushing for oil production to be raised following intense pressure by the Biden administration. But it's unclear if other OPEC and non-OPEC members, which includes Russia, will be on board with this. As far as the outlook for oil is concerned, unless there is a substantial boost to output, any immediate drop in prices from a symbolic increase might prove to be short-lived. Thank you for watching the Daily Market Comment here at exam.com.